All right. Hello, everyone. How are you today? Today we are, let's see, August 9th of 2023. We are going to talk. Today we are, let's see, August 9th of 2023. Oh, hold on a second. I have a little bit of a reverb or something like that. Let me fix that really quick. Okie doke. So, today we're going to go over the ABE indicator and kind of what it is. I've had a lot of questions come out about this because it is something that we just kind of popped out there, and it was kind of out of left field. No one knew that we were working on it. But anyways, I wanted to take what I do behind the scenes in some of the more complicated math and just kind of get it into like a more simplified version, so that way everyone can see it and it can, make sense. And so the ABE indicator is the at the money butterfly edge. It does apply to condors as well. It applies to, butterfly structures, lots of different butterfly structures. The main question that I've gotten about this is, in general, where does it apply? Like, what DTE does it apply? Well, as far as the DTE for the ABE indicator, it is mainly geared towards 10 DTE or longer. Mainly just because there's a lot more vega weighting out there. As far as once you get kind of closer in, there tends to be a lot more pressure on just pure time decay. Now, it's not that it doesn't, apply to it. In fact, I've had some few members actually already send me their results as far as them using it just briefly, because we do have a free trial on it. And it has actually been really good for them for something that was actually shorter than 10 DTE, even sometimes 0 DTE. It wasn't originally intended for that purpose, but I'm really glad that it has some sort of correlation to different trades that people are using that are, geared around structures that are around ATM or trying to pull theta-based, income out of the market. And so that's really what this was geared towards. So let me just kind of briefly go over what this indicator is and what it kind of looks like and what we're really looking for it. I do have like a little write-up underneath the ABE indicator if you ever sign up for it, about kind of how to use it. But in general, we can see up here that we have like currently today's butterfly edge is 59%. While that's on the higher side, it is kind of where I start to be a little bit more cautious of entering a new, butterfly or time-based structure right now. Even though right now there is a lot of people saying, oh yeah, it's a great time because volatility is high. Volatility is not always correlated with good butterfly pricing or good condor pricing. And that just happens to be how options are priced along the chain. Now, you can see here that over the last couple days, we have started to kind of come down from a peak in the ABE indicator. That's also something that's not as advantageous right now. So as far as the optimal time to enter or start pushing on the edges of butterfly structures or condor structures or theta-based structures in general is when the ABE indicator is high and rising. So just a few days ago, and in fact here in just a little while I'll show you a trade that I entered in the Adapt Advanced a few days ago, I think right in the beginning of the month, so about 9 days ago. And the quote-unquote theta on this trade is significantly lower than what we've actually made on it. And so that's kind of where it comes into. Theta is not, it's a garbage Greek. I know I've talked about that many times before, but it shows up in different ways whenever we're dealing with complex option spreads. So anyway, so as far as that's concerned right there, I do also throw in just a little like quote next to it that, they're actually all Spaceballs quotes. But anyways, as far as right now, it's just we break for nobody. Like, it's just kind of like, yes, it's okay. We've got a little bit of an edge, but it's not too big of a deal. When we start to go up to the top end, they've gone plaid. At the very top end, we're not doing it for money. We're doing it for a bleep load of money. So things like that. And then when we get down to the bottom end, it's like, comb the desert because there's no edge, right? We're trying to find it. And then down at the bottom, the radar, it's jammed, right? Because basically you're not going to find anything. So if you look back at, on this little graph down here that we have of the current indicator, The historical, every dot is about a day. I don't have dates down here. I know it's offered actually at another site as well, but they have some dates down there exactly of when this applies. But basically, you just kind of want to know when you're going up or down. It does update every minute. So that's something that's always been asked is, hey, how often does it update? It does update every minute. It doesn't mean that it changes every minute. A lot of the time, general edges in structures, especially because I'm looking, 10 DTE and longer, typically those structures are typically around all day. They will vary and change throughout the day, sometimes by a few percentage points, but not really nothing too dramatic. But when we shift from one day to the next, that's when options pricing gets very different, right? Because basically the new market, almost the entire chain is repriced. So it's kind of cool how that works. But it is updated every minute. It starts kicking off not really at the open because some of the options data is still kind of feeding in. And we use different options modeling and different calculations for actually determining on whether there's an edge or not. And so as those option streams come in and as the buying and selling actually starts to happen throughout the day, that's when we can start to pull in some of that data and we get that. So typically the first, maybe 30 minutes of the day, there's kind of some erroneous things. You'll see the indicator will be like a 6 or something like that day. And then eventually it'll populate here, sometimes 20 minutes, sometimes 10 minutes, sometimes about 30 minutes or so. But it's pretty well established after the first hour. As far as other questions are concerned, that would be. Let me actually go through here. So, is it meant for broken wing butterflies? The ABE indicator can work for broken wing butterflies. The way that I see broken wing butterflies, and here I'll pull you guys over to this. Let me start just a new trade. So the way I see broken wing butterflies is really that they are a symmetrical butterfly. They just have what I call an adjustment structure on them. If you guys are like Adapt Advanced members and stuff like that, you guys are very familiar with me calling something an adjustment structure. But let's just kind of come out here. We'll just come out here to 30 DTE. And let's throw on a, quote unquote, flat butterfly. And okay, so here we've got a flat butterfly, and this flat butterfly is symmetrical in every way, right? We've got equal contracts on both sides. So what if we change this, right? This is just an at the money, right? This, by the way, also the ABE indicator is not required to be perfectly at the money, right? It is something to be, if we've got this shifted down, I mean, I'm just saying here, if we've got this shifted down to roughly here or so, that's still fine, right? We're still, we're still kind of out of the money on our longs, and we're still kind of getting somewhere close. If we wanted to turn this into like some sort of condor or something like that, that's fine as well, right? It's all fine, right? It's basically just trying to grab that edge on if there's really positive premium in structures like this, right? So let me pull this back together and we'll go from here. Okay, so here we've got a symmetrical butterfly. If we wanted to do a quote unquote broken wing butterfly on this or something like that, let's just kind of, here, we'll commit this guy. Oops, wrong commit. So let's just commit this guy and we'll just call this blah, and we'll just turn this into a test. All right, so we've got this guy committed. Now, what would this look like if we broke it? How would we kind of break this wing that we have up here, right? How we would break this wing is we would go -10 and 10. So what did I do here? Let me clean this up just a second here. What did I do here to get this quote unquote broken wing butterfly? I added a vertical to a symmetrical butterfly, right? And that's all a broken wing butterfly is two pieces. It's two components. And both of them have either an edge or not an edge, right? Sometimes there's an edge in a butterfly, but there's not a strong edge in that bull vertical that makes a broken wing a broken wing. So separating the structures out in their own. Now, the reason that I keep a butterfly structure separate than the two verticals in it is because the two verticals in it reduce their capital, right? So I'm going a little bit deep here, but I just kind of wanted to kind of explain some of these generalities that we kind of talk about. Also, if we do an uneven butterfly, so let's say that we sell 5 up here, and we sell, so this is a uneven butterfly, right? Now, still, an uneven butterfly is the same thing as a broken wing butterfly. We just have less contracts up here. You can see if I commit this guy, all of a sudden now he's an uneven butterfly, right? I've got 10 down here and I've got 5 up here, right? Same concept. It's the same thing whether it's symmetrical as far as that's concerned. So either way, it does work. It's all the same. It's still grabbing that same inherent edge. It's not necessarily, the ABE indicator is not intended to suggest anything, suggest a specific type of structure. It's just meant to say, hey, is there general edge in entering today? And I think a lot of the time when what some people do with butterfly structures or condor structures or time decay structures is they look down here at this vega component, right? And vega is a very large component of options, and especially of theta-based options. And what ends up happening a lot of the time is that we look at things, say something like the implied volatility. So like we have the implied volatility. Is high volatility a good time to put on a butterfly? And something that I'll talk about here is like back in COVID, right? Back in COVID, the volatility was exceptionally high through COVID. But all we'll see is mushrooms. Man, that's crazy that happens. I know that. I wonder why it does that here. I can't believe that does that. There we go. Okay. Oh no. Why? Okay. Let me fix something. Thank you for telling me that all we see is mushrooms. That's my background on my other monitor. Let me just change this presentation here. I'll fix it. Give me just a second here. I appreciate you telling me. Okay, that should have fixed it. All right. So yes, thank you. Okay, so let me go back. So a lot of people really do focus on. Thought we were yes, right, psychedelics. So a lot of people see like implied volatility rising and think that that's an edge and things like that. And I mean, don't get me wrong, theta-based structures do have an edge, in negative vega land. But as far as like the ABE indicator is concerned, if we go back to all the way to COVID, right? COVID had a dramatic drop and a huge volatility spike, right? The implied volatility was some of the highest we've ever seen. Now, when the implied volatility spike is that high, what sometimes happens is you get some mispricing in options and all sorts of crazy things actually happen. Well, the ABE indicator picked up that there was definitely, yes, there's implied volatility rise, which is on edge, but there are options that were basically going to be disadvantageous in a structure like that. And what ended up happening is I want to say somewhere around like this first drop or so, the ABE indicator just got crushed. I can actually pull it up really quick and we can go through that. Let me just pull that up. And okay, so let me cruise over here to stop screen, present, and we'll come over. Okay, so here's a Google Sheet of the ATM Butterfly Edge, and you can see here, let's just kind of cruise through some dates here. And the reason why I bring up COVID is, there it is during this time period, right? So 218, you can even see here, we briefly got into kind of the mid territory, but really, I mean, after 210 of 2020, basically the whole thing just started to just crash, right? So 210, we'll go look at the dates on that. So just keep that in mind, 210. And then we really didn't get to where butterflies had an edge again until 326, right? When I'd say that there was actually a decent amount of edge and butterfly based structures. So there's a lot of people that were like, oh my God, volatility is really high in COVID. And they got freaking annihilated during that whole crash time period, all that kind of stuff. And that was because of how the options were being priced at the time and how market makers were dealing with it and the volume in different options, right? So when that started to happen, it basically cratered. And you can see in 228, which is probably pretty close to the depths of the COVID crash, even though volatility was cracked out high, it basically said don't do a butterfly. And if you do, you can go test this yourself if you've got some back testing software. And maybe we'll do that if I've got a little bit of time today. Basically, it just gets demolished, right? So not a very fun time to be a butterfly trader during that time period. And that's a nice savings of not having to deal with any of that craziness, right? So anyways, so let's go look at that. 210 is basically the last day that it was an okay time. And really, even then, you know, once you start dropping, you really want to get out of here. So about 210, and then we don't get a good structure until 326. So let's go look at that. I'm going to pull you guys back over to my O&E, and hopefully you guys don't get mushrooms again. All right, stop screen. All right, we're back over here. So 210. So strangely enough, look, even before the crash, like right here, that was the last time that you could really enter into a butterfly. After that, once you got up into these moments, it basically said, no, just get out of Dodge, right? And so that would have kind of, you know, been a nice little deal for all of that rolling over, getting hammered type of situation. So if we go back to 210, let's just jump back there. And let's just see how, you know, some sort of butterfly-based structure would have performed over the few days. Now, just because you get a good entry doesn't mean that you can't, you know, have, you know, any kind of, you know, positioning for other types of structures or things like that. Ignore some of my random trades that I do. All right. Here we'll just go out to, yeah, we'll go out to 30. I mean, screw it. Let's go out to 30. I picked 30 because it's 30 DTE. That's kind of how the Black-Scholes models always kind of pick up, you know, where, you know, 30 DTE. I don't know. It's just one of those things. All right. Let's go -20, and we'll just throw some sort of random broken wing butterfly on here because everyone does apparently broken wing butterflies. By the way, I kind of stay in symmetrical butterfly land, so that's kind of why I say that. But here we go. All right, so regardless of what anything says, here's a symmetrical butterfly. Let's kind of break this down. We can use different structures to offset this. Today, we will just break this to make things nice and even, equal. Let's get down to, you know, let's call it 0 delta because no one likes direction. So here, sure. All right, so here we are. We've got a flat butterfly structure, broken wing butterfly right across the money. Should be nice and glorious. Supposedly, it's a fantastic day to enter this thing. That does not, if you're using volatility, it would tell you absolutely not to do that, but we aren't using volatility. We're using the ABE indicator, right? So sometimes volatility is a good thing, sometimes it's not. So anyways, volatility is basically at its lows on this day, and it's telling us to get in. So let's see how it happens. Let's just put in some random. Now remember, it's not my preferred. Not me. It's not my preferred. What is this? Let's just go just test and account. Sure, let's go with test again. And all right. So it's not my preferred style to get the ABE indicator while it's kind of stalling at the top. I really do like to grab it while it's rising pretty aggressively and it's gotten into the high. So I like to get really early into the ABE indicator, but this is all right. It'll be all right. We'll see how this plays out. There's still quite a bit of edge on this day. So let's kind of click through and we'll just go to the next day and we'll just kind of see what happens. In theory, of course, we should be getting more decay than probably what the models are anticipating. So far we have $105 in quote unquote theta. We're slightly higher with 135. Not bad. I do expect better, but we'll see how it works out. All right, so market's kind of cruising, kind of doing its thing. We're having large days. You can see that we're having, full 1 standard deviation days. These are, they're just large days for the volatility, right? Let's click another day. Let's just kind of see what happens here. We know that we're like going into this like impending doom of COVID. So anyways, we'll see what ends up happening. On a nice thing, or on a nice component too, the market hasn't necessarily outrun our structure. We really haven't been decaying normally as much as I say for this indicator. This probably is yet again that same concept of I really do. You want to get the ABE indicator when it's rising and it's accelerating, but you still should have a decent amount of edge. And as you've seen, we really haven't taken a drawdown during this structure. We put it on really nicely. It hasn't like flopped out or blown up or anything like that. It really has been doing a good job, and we should start to see this good solid acceleration in a structure like this while it's quote unquote getting theta. So the volatility is starting to kick in. I know that we're getting pretty close to COVID now. So anyway, so you kind of saw that we had decent entry pricing. It worked out okay. We're up 3%. Not the best example of a time period, but it is what it is. We can go to one of my trades that I just did here recently. Here's a live trade of this. I'm probably not going to be able to go live because I don't have my trading software up. But yeah, so we'll go back one day. And I'll show you guys one of my recent trades. That is not one of my recent trades. That's a whole different animal. Okay, so here, spoiler alert, this is going to be what it's going to end up like. This is as of yesterday. We're actually up higher today. I think we're somewhere around 15% or so today. But let me go back to when this started. This was on 8-1. All right, so going back to 8-1. You can see that is kind of the base structure right here. You can see that my T+0 line's all kind of weird and stuff like that. But basically, I didn't take any kind of directional bet. Everything was kind of just as it is. But there was a large advantage in at-the-money butterfly type structures, and we started to take that. Now, I'll just click through days because it's only going to be 9 days, and you can tell our theta down here is like 12, right? So here we are. This is our next day. What I ended up doing here, we had that 2 standard deviation day, but because we had such a strong edge in this structure, right? Since we had such a strong edge in this structure, look how well it held up to the downside, right? So that's one thing that's nice about getting in when you have, quote unquote, strong edges in the ABE indicator, is that the trade itself is significantly more robust. It doesn't just get demolished. So, let's go take a look at what happened to volatility. It cracked out, the market dropped like a brick, and we supposedly have a negative Vega trade, but it held up very well, right? There will be times that you'll test a structure similar to this and it'll just get annihilated, right? So now I adjusted this trade. I shifted into a different trade. That's part of the adapt advanced metric. That's a whole nother animal. But we can kind of click through this. So there's still a strong edge to at the money. And so I'm pushing still strongly on that at the money edge. And I make this trade, and you can see, so ignore some of the T+0 lines. It's getting kind of weird in the late end of the day. I can actually go back to previous to the end of the day, because end of the day like got some really weird pricing in there. Okay, so here is where we're at, right? You can see that we're starting to crank up, and we're starting to make a lot more money than what's like quoted in theta, right? And here we go. This is the 4th, so we've been in this trade for 4 days as of this date, and you can see we're starting to get really puffed up, right? And this is as of Friday, right? And we haven't taken a lot of delta risk. We haven't really done a lot. We've really just putting a lot of edge on the ABE oscillator, right? And then here, of course, we'll go to yesterday, which is the 7th, you know, just slightly over the weekend. And you can see that we've done even better, right? So this is kind of the whole deal, is that whenever you start putting a bunch of pressure, is that yesterday? Yeah, that should be, not yesterday, that's actually Tuesday, so sorry. Anyways, you can see that we haven't done a lot of, you know, directional betting. We haven't done a lot of, you know, super risk or like leaning or making, you know, making guesses on where the market is. We're just using that indicator. So that's what the whole indicator is about. Hopefully that answers a bunch of the questions that are out there. Some questions that have been revolved, I think, you know, some of the more advanced traders, they instantly are like, well, when the ABE indicator is really negative, is there another trade, right? Keep in mind that a butterfly flipped upside down, or even a condor upside down, costs a lot more money for the amount of inverse theta that you get and stuff like that. So the profitability, the risk reward ratio starts to change quite a bit. So your allocation has to change, different things like that. So yes, there are edges to some things on the opposite side. We go into that in the Adapt Advanced, and also starts to kind of show up in the Adapt Daily at environmentaltradingedge.com. But in general, sometimes it's better to just wait around for there to be good edge, kind of like Warren Buffett approach, right? You know, you don't need to be in the market every day. Just wait for it to kind of be a little bit more advantageous to you. That also doesn't mean that there aren't other strategies that work when the ABE indicator is low or you know, middle ground. Really, when it's in the middle, when the ABE indicator is in the middle, it's basically saying, you know, there's not really a discernible edge. And then when it's definitely at the low, it typically means that there's negative expectancy in trying to be like a income-based or a theta-based type trader that's using structures very similar to this. So anyways, that is, I think, most of the questions that get sent to me. I did have another question that here, I'll knock this out really quick. So this is a specific question about one of the trades that we had. One of the trades that we have is what's called a surf trade, right? And it has a certain allocation, right? So a surf trade, and I can actually, since I'm showing you this, I can show you one of our surf trades, like A2. Sure. I mean, I'm just grabbing like a random, but this is a surf trade, right? So this is one of our recent surf trades that we've had, and its allocation calls for a 20% allocation because we use an allocation model. Now, granted, you don't have to do 20%. There's other ones as well. But the whole idea behind this is like, how much margin does it cost? What does it actually cost? Do I go off of the lowest point on the expiration line, which you can see here, the lowest point on the expiration line over here is like 154, but yet our actual margin or the cost of this trade is only 119. Now, the reason why that shows up is there's kind of an anomalistic things when you start to look at like the analytics of a calendar that isn't possible. So let me just kind of go over here. So if I put in a calendar, and I'll just start up a new one, you can see that there's something kind of off here. So a calendar is a symmetrical trade, which a symmetrical trade means that there's equal risk on one side and the other side. But this analytics graph is not showing equal risk, right? One side is higher than the other. And if you notice, the margin down here is 73,000. Now, granted, different brokers are going to function different ways, so please don't take my word on this. Go talk to your broker dealer or whatever, right? None of this is advice. But anyways, the way that I do things is I look at the Reg T margin. Reg T margin is basically the cash equivalent at what it takes to put in this. We don't use portfolio margins in any of our systems. We don't use extra leverage or anything like that. Options are already leveraged plenty, right? The idea behind it, though, is that margin is really what the cash equivalent is. So that's what they would take out of your account if you needed like cash, right? And if you notice, it's actually the higher end of this symmetrical calendar that is the actual margin. So if you look at the Reg T on one side, sometimes it'll show some crazy low number, but that's not actually what the cost of the trade is. So anyways, that's how we determine how much is actually in the trade and what we would use. So if I go back down here to, this surf trade down here, the 8-3 surf trade, we'll clear these out. If I go down here, even though this says, roughly $155 or so, 155,000, really the margin on this is only about 119. So if I was running, so we can just do the math on this really quick here. But basically, so this is the equivalent of basically a $595,000 account. Now I'm just using numbers here. So, smaller, bigger, it doesn't matter. It's just a percentage. It's just 20%, right? So this one would equal a 20% allocation to almost a $600,000 trading account. For whatever's being allotted to the adapt daily, and that's what this structure was meant for, and that's what that question is. So hopefully I answered that question, and that kind of takes care of it from there. Remember, always talk to your broker. Always, just give them a call and just say, hey, how are you going to margin this trade? They can answer those questions really quickly. You never want to get yourself into a little bit of a pickle of having too much margin in a trade or having a margin call or something like that. What's nice about options is that if you do them right, you'll never get a margin call, unlike like a short trade or something like that, or using leveraged on certain things where you get margin called if something happens, right? So, all right. Well, let me look one more time and see if anything got shown up in the questions. No, and thank you guys so much for letting me know that the mushrooms were showing up instead of the actual screen. I've been having some really weird things with sharing screen lately, so that's something weird going on with Windows 11, I think, and how it does like share screens. So if anyone's got any questions about the ABE or the indicators, I will hang out for about 10-15 more seconds. You can just throw like a single letter in the comments to let me know that you're working on a question, and if not, I will just move on. All right, guys, I'm going to leave you guys there. Check it out at etradingedge.com. It's also available over at aramir.com if you're a member over there or anything like that. There are trial subscriptions out right now, so it's free for a month. It's very inexpensive. It's like $27.95 for a month. It's going to be, it's just incredible. I use it on a daily basis with all of my trades. I can't trade without it. I honestly, I'd be lost without it. I have lots of metrics in the Adapt Advanced that I use on top of the ABE, but basically I'd just be lost on when to enter, how much risk to take, certain things like that if I didn't have it. So it's very invaluable to me, and for $27.95, it's kind of, it'll save you a lot more than that most likely. So anyways, check it out. If not, hopefully you guys send me some nice questions. You can always reach me at wayne@etradingedge.com also. All right, guys, you guys have a good one. Bye.